On behalf of Fitch Ratings, thank you for being with us.
Thank you for having me, and it's always nice to see you.
You know, the Philippines has been a strong growth performer. In fact, one of the strongest in the APAC region. And that performance, underpinned by your reform efforts, were enough to convince us last December that the Philippines deserved to be upgraded to BBB with a stable outlook. I'd like to begin on that theme with the macroeconomic outlook, because when we upgraded the Philippines, we also flagged that you're facing, in our view, overheating pressures, rising inflation, a widening current account deficit, rapid credit growth. How do you assess the Philippines' growth performance? Are you satisfied? And do you see these risks of overheating that we've flagged?
Well, at the moment, the second quarter results came out, and it looks like our economy took a breather, and our growth rate, however, for the first half is still at the 6.3% rate. I think we can grow at a faster rate in the coming months, and we believe that we're not really in danger of overheating at the moment. We still have a long ways to go. Our industries are not running at 90% capacity or there, so I think we're still well within safe borders. We are looking forward to continuing our build program. Basically, we are just catching up with our neighbors on infrastructure, and that is going pretty well. Another reason I don't think that we're in great danger is because we did pass our tax reform and our first package of the tax reform, and we have been able to raise our revenues quite significantly. In fact, the first half of this year, our revenues are up almost 20%, our total revenues, and that is the basis for our additional spending. Of course, we are fortunate that our neighbors, China and Japan, have committed around 9 billion each in ODA money, which we are going to be using, and we are using already for our build program. So we have raised our own funds. We have a large amount of commitment on ODA. Actually, the total is $19 billion. 9 each from Japan and China, and $1 billion US dollars from Korea. So this is what we're using to fund our expansion.
Focusing still, though, on the macro outlook, the external environment is very challenging now to emerging markets such as the Philippines. We're seeing contagion from spillovers, from rising U.S. interest rates. It's hitting markets such as Turkey. How do you see the Philippines faring in that environment? Well,
as you know, we have to adjust to what's happening around the world, especially the continuous rise of interest rates in the U.S. and the shrinking of the balance sheet of the Fed. We know interest rates are on the rise, and I don't think there's any. It's not a secret that the U.S. has announced that they will continue on this trend.
We expect 2 more hikes by the Fed this year, another 3 next year. I think you're on the same page.
And well, we have adjusted to those, so we have had basically already 100 basis points increase in our rates this year, and I think we will cope with it as best we can. Fortunately, as I mentioned, we are not a big trading partner. We're not a big trading nation, so we're not going to be affected maybe by the slowdown around the world, slowdown in demand around the world. And we have, as I said, we're quite well funded to continuously support our economy by our build program.
Because that's another risk, is
Yes.
the trade tensions between the U.S. and China. And we have to
Yes.
be worried about the APAC region being such an export-oriented country. You're a big exporter of electronics. You've got a
Yes,
strong
that's
services.
true. But
Do you think you'll be hit by that?
in the long run, yes.
Mm-hmm.
In the long run, if this trade issues don't get resolved in a way that's sensible, in the long run we will be affected by it. In the short run, though, I think steel prices are going to soften because the markets in the U.S. are basically going to be closed. Since we are spending a lot on infrastructure, that should benefit us. But again, it's going to be very short term. We are hopeful that in the medium term, there will be a good settlement of these trade issues that are happening. And it's not only China. I mean, it's Canada. It's, to some extent, Europe, and now it's in Turkey.
So what I'm hearing from you is really the growth momentum in the Philippines is a domestic-driven story.
Yes, it
with,
is a
with
domestic
tailwinds from the public investment program.
Yes.
And you don't think that the 100 basis point hike in interest rates here in the Philippines so far will put a dent in the growth the rest of the year?
It will a bit. But as I said, we're still only at 4% or around that area. So it's not like,
It's not growth threatening quite yet.
It's not yet growth threatening, because if it were, believe me, a lot of my friends in the industry will be calling me up every day. So far, so good.
But you're not the one that sets interest rates, are you?
I beg your pardon?
You're not the one that sets interest rates.
No, I'm not the one that set, but I do sit on the monetary board.
Okay,
Yes,
so you have a voice there.
Yeah.
Okay,
no,
so
well, I mostly listen.
what is your growth outlook then for the rest of the year? We have 6.8%, but we see that at risk now with the second quarter outturn that was a little bit weaker than expected.
Yes.
What do you think?
I think we will still be close to 6.8% this year. I think the momentum on our build is very strong, and we're really moving quite well in our infrastructure program.
When President Duterte and the administration came to office in June 2016,
July.
Sorry, in July 2016,
Yes.
forgive me.
No, I count the months, believe me.
You're very precise. You count the days. He came into office with a 10-point socioeconomic program. And 4 of those elements, the top 4, in fact, are of great interest to us at Fitch Rating. They deal with macroeconomic policies, tax reform, infrastructure, and ease of doing business. If I could now shift gears a bit and ask you about each of those in turn. We've covered some of the macro outlook. On your Build program, you have a very ambitious spending plan. You aim to increase infrastructure spending as a share of GDP from 4.1% in 2016, if I understand correctly, to 7.3% by 2020. How do you plan to do that? Because other Philippine administrations before this aimed to do similar investment drives but weren't always successful. What are you doing that's different?
Well, first of all, our president is really on top of this, and he, he makes sure that the economic team is performing. I meet with our basic build team, which is the DBCC, essentially the budget, NEDA, ourselves, and then our 3 main infrastructure units, which are the public highways, transportation, and also our BCDA, which is the basis conversion unit. And we make sure that we are managing this very intensely. We have, as I said, meetings practically every 2 weeks. We look at all the bottlenecks, whether they come from the budget side or whether it comes from getting our right-of-way issues, and we address those very intently. And we have actually managed to bring up our infrastructure investment as a percentage of GDP to over 5% already. Yes, and we're intent. We also manage our foreign, how would you say, ODA flows quite intently. We meet with our Japanese counterparts on the ODA side 4 times a year. It's always a home and away deal. We do the same with the Chinese, our Chinese counterparts. In fact, next week I'm going there again to review all the projects to China, all the projects that we are funding, and sweeping away the roadblocks. There are roadblocks here and there are roadblocks there too, So
right. I think the whole region struggles with the infrastructure bottlenecks.
Yeah.
So it's good to hear
we're addressing it with, how would you say, just better management. That may sound a little, not solid, but it works. It actually works.
Part of your infrastructure drive must rely on foreign investment flows.
Yes.
Now,
yes.
You're very close to the president. If I'm not mistaken, you were classmates. You know him very well.
Oh, yes.
He's been in the spotlight internationally, very heavy-handed approach to law and order, very controversial program to reduce illegal drugs in the Philippines, very violent crackdown. Do investors you talk to express concern about that? Do you see evidence they're being deterred from investing in the Philippines?
I just look at the numbers, okay? Last year, our total foreign direct investment was $10 billion. That is double what we had in 2015. This year, we are, for the first 5 months of the year, we're up about 25% in foreign direct investments. So apparently people are investing here, and it's really funny because our incentive granting agencies are recording less commitments. So the foreign investment that's coming here are not seeking investment incentives. They are just coming here because they want to participate in the local market or set up here to do exports, and they pay the regular taxes, not asking for too much incentives.
But is there a legitimate concern that the president's style could deter investment going forward? Do you see?
In the beginning, we were getting a lot of comments, but I don't hear too many of those comments nowadays. And as I said, we just look at the numbers. Of course, the newspapers and the media, in one way, are, especially from the West, are quite, how would you say, critical. But if you look at our citizens, they feel a lot safer than they were. They see that there are a lot less drugs. Oh, let me point out something else. For the first time we've been experiencing, we've been actually seizing drugs that people are trying to smuggle in. I'm talking of meth. We call it shabu here. That means to say that they're not manufacturing it here anymore. The demand is from outside. We've closed a number of the labs that were producing meth here, and I think the local supply has shrunk.
So the stability and the safety issues in the Philippines, I guess, is generating some positive domestic sentiment and helping investment be afloat.
Yes.
On the infrastructure drive, what do you think are the critical needs in the Philippines? What areas are you focusing on? And if you had to convince investors that the program is achieving results, what examples can you point to of big breakthroughs in infrastructure?
Well, we are doing, simple things like widening roads, like building better bridges, like improving our ports and our airports. No, I'll give you in our airports. We have now a lot more airports that actually have night landing capabilities. I think it's about 7 airports more. So that means to say more efficient use of our facilities, more flights, people have better access to travel. And of course, with more flights, you get better choices and there's more competition among the airlines. So prices are down. So people can see that. We still have horrendous problems here in Metro Manila, okay? But outside of Metro Manila, we're seeing that the business is really booming. In fact, I was just speaking with some people who are in the fast food business, and they said for the first time they've experienced sales outside Metro Manila are rising faster than sales around Metro Manila. And they said also costs in Metro Manila are rising faster, while those in the provinces are flat. So there's a lot of expansion of business outside of the Metro Manila area.
Okay.
But these are anecdotal. But we do see a lot of roads, bridges,
You're
ports.
talking about a subway here in Manila.
Here in Metro Manila, the subway they're already doing the preparation for building the subway. In fact, I've already signed the first loan with the JICA in Japan for $1 billion.
I wanted to ask you about the financing. Where's
Yes.
the money for this? Some of it's on budget. You're going to raise the spending
Yes.
budget as we discussed, but where's the rest of the financing coming from?
First of all, we are raising our own money. Okay, I figure we will raise about 20 to 22% will be from our own increased collections of taxes. Then the next group we want to tap are the ODA funds that are being provided by Japan, China, and as I said, Korea. And those are at very good terms, okay? They are long-term and relatively low cost. Then, of course, we've gone to our domestic market, our domestic pool of funds. So we're borrowing the majority of our money. It's mostly pesos that we are using.
Local currency funding. So you're less exposed to the vagaries of the dollar exchange rate, because that's putting pressure on emerging markets.
Yes, so it's the majority of our money is domestic. You have to remember the BSP reduced the reserve requirements by 200 basis points, and that released close to 180 billion pesos. So that's available now to fund our bonds.
Okay. Is there a role for domestic banks in
Yes.
infrastructure drive?
Oh yes, definitely,
Okay.
definitely. They are funding the contractors who actually build the roads for us. Of course, in our government banks, I have assigned the DBP to be our main infrastructure financing bank. So there's our own taxes, and then there's the ODA, local funds, and we have been quite successful in raising money abroad. This year, and at very tight spreads. In January, we floated $2 billion at US for 10-year paper, and our spreads there were about 35 basis points. And that's down from 103 basis points in 2016. We had a small issue in the Panda bond market, only $250 million US. We're just trying it, and we took it at about 35 basis points as well. And a couple of weeks ago, we raised $1.39 billion US in yen in the samurai market, and again, the weighted average spread there was 34.5 basis points.
Okay.
So that's another
Right.
source of funding.
Okay, so on the domestic side, you mentioned the revenue effort.
And the domestic market.
Part of our upgrade in December was based on the fact that you had successfully gotten through the first package, which
Yes.
was a revenue raiser. You cut personal income taxes, but at the same time, you broadened the VAT base, you raised excise taxes.
Yes.
Now you're working on the second package.
Yes.
What does that aim to do, and how's the process going?
The second package aims to reduce our income tax rate from 30% to 25%. We also aim to rationalize and modernize our incentive system. And the administration proposal is to reduce taxes as we reduce our incentives.
Okay, and this is meant to be revenue neutral.
Yes.
So that the lower corporate income tax will be exactly offset by
Roughly,
giveaways under
yes,
incentives.
yes.
Are you confident you'll achieve that?
Yes, I am.
Okay.
I am confident. That
What's
we
your
will achieve it.
timeline for passing the second package?
We would like to pass it before the end of this year.
Okay, and it's on
You know,
track.
it's actually in plenary already in the House. And the Senate will begin hearing it, and we have enough time to finish it by the end of this year.
Because one of the weaknesses from a peer comparison
Yes.
is a low revenue ratio in the
Yes,
Philippines. You get about 16-17% of GDP in revenues.
Yes.
That's only half the rate of your BBB peers.
Yes,
So
that's
your
right.
medium-term objective obviously is to raise
to
that ratio.
eventually raise that. But you know, I'll tell you, we have raised the percentage of our revenues as a percentage of GDP is the highest ever for the first quarter of this year. And we think that trend is going to continue.
Let's just wrap up on ease of doing business,
Yes.
the fourth point I mentioned in the
Yeah.
socioeconomic package. The Philippines has actually slipped in the ease of
Yes.
doing business rankings.
Yeah.
Indonesia and India, Thailand have
Yes.
all surged ahead, but the Philippines has slipped. It's
Yes.
113th
Yes.
on the list
Yes.
of 180 countries.
Yes, we're keenly aware of that. Okay.
What's happening, and what do you tell investors you're doing to improve the investment climate?
Well, first of all, about a month ago, the president signed into law the Ease of Doing Business Act. And that is really aimed at getting the local governments to up their game. You know, we have two levels here. We have the national government and we have the local governments. Although with the national government approvals are, you know, not as speedy as we want, it's the local governments that are giving us quite a bit of headache. So this is a way of, how would you say, incentivizing them
I see.
to up their game. Secondly, we have also passed, the president also signed into law recently, the national ID system, which I think will improve our services to our own citizens, as well as help them, you know, do business more easily. You know, like now, to open a bank account, you need, I think, 2 or 3 separate pieces of ID. I think with the national ID that's going to be beginning to be implemented this year, it's going to ease that process.
Okay, so...
And you know, we have, what is it, 80% or 85% of our people are unbanked.
Yeah.
So
very low bank
very low. So
penetration
this
rate
will
here.
encourage it. Yes.
I see. So you're expecting you might be moving up in the rankings and recovering some.
We
of your
hope
place?
so. Okay, you know, this is a real tough road to hoe. You know.
You know, your neighbors, you live in the highest growth region of the world,
Yes.
and it's I guess a treadmill just to
Yes.
stay in
Yes.
place requires running
Yes, that's-
faster and faster.
yeah,
So we
that's
wish
true.
you success on behalf of Fitch Ratings, and
Thank you.
thank you again for your time.
Thank you, and we'll keep our nose to the wheel and hope that things will work in the long run. By
Okay.
the way, of that 10-point agenda, I mean, we have stuck to it, we have not changed it, and we are achieving quite a bit of it already.
Okay, good to hear.
Thank you.
Mr. Secretary, thank you again
Thank
for your
you.
time.